Going live. I'm live. All right. Good morning. Let me share my screen here and we'll get going. Let's see. Share. No, don't want that share. Share screen. That looks better. Window. I want to share that window. Yes. Sharing that window. All right. We're looking at charts. That's looking good. Let me just verify here on YouTube. And we're live. All right, super duper. This is only my second live YouTube, so bear with me. Let's jump right in. I'm more prepared today than I was yesterday, and so what I've done is put together a checklist that documents my process for looking at financial charts. I'll polish this, and as we go through these live sessions, and ultimately, well, not ultimately, I'll get it put up on my website today, right after the session, and it'll be available for a download, and I'll put that download link in the not the description. I'll pin a comment at the top of the comment thread for the download of this PDF. I see. Let's see, somewhere here I can do pop out. Looks like we don't currently have anybody visiting, and so I'm just going to jump right in. I noticed that the precious metals are moving today. This is silver in the daily time frame, obviously, in this chart that we regularly look at. Had a nice day in silver yesterday, almost 3% gain, 79 cents, essentially 80 cents. That's a nice pop in silver. Continuation of that move this morning. We're up another, we're up another 1.6%, 46 cents, pushing up into this resistance zone. And so let's scroll way out and look at why do I call this a resistance zone? Well, it's from this action back here in 2020. And so we got these, you could call that a double top. I mean, really, it is a double top. And so that is when I drew this support resist. Well, at this point, it was just a resistance zone. We got these double tops. And when we look at those double tops, notice that they are pokey bars. They are candlesticks with a fairly substantial upper wick. And so when we talk about individual candles, Japanese candlesticks, if you will, we have the body. And so in this case, that long green bar, that is the body of the candle. And then on either end, top or bottom, we often get a wick. That's this thin line. And so big wick there, big wick there. And so what I do is I draw my zone basically at the top of the wick. And then the bottom is at the top of the body in this case. So, or roughly in there. And the reason I do that, the reason I start with identifying significant support and resistance zones is that quite often those zones come into play further down the road. And so that's what we're seeing in this case. Let me zoom back in now on the current action. And so that's where that support resistance zone came from. Now, here we are, that was 2020. It's 4 years later. You think, Brian, why'd you leave that drawing on your chart for 4 years? Well, here it is. I mean, this is back in April, price poked up into that resistance zone, was unable to push above it, didn't have enough energy to push all the way through that zone and up above it. And so price pushes up into the zone, pulls back, tests it again for resistance, and the test fails. So price falls off, finds another support zone, which again, it's a support and resistance zone again. Same thing. There was a double top. I drew this box rectangular support resistance zone back in April of 23. So 14 months ago, 16 months ago, whatever that is. And again, Brian, why'd you leave that drawing on your chart for 16 months? Well, because it's important, as we can see here, double top, bunch of sideways choppy action. We get some energy and we push up towards that resistance zone and we fail. Same thing. And then finally, we get enough energy, push up above it and through, and now we go test that level for support. So resistance becomes support. That's exactly what happens in a uptrend. Resistance becomes support. And 180 degrees opposite in a downtrend. Support becomes resistance. And so now back to where we started, we were talking about this higher support resistance zone. And we can see that price back in May pushed up above that level, pulled back and tested it for support, bounced, tested it for support again on the 2 candlesticks, dropped into the zone, chopping. Now we're chopping within the zone, failed. And so cut to the chase, this is where we're at today. We've got silver pushing up into that resistance zone yet again. And hopefully I've just explained to you why I believe that resistance zone is significant. Well, and there it is. I mean, we go back, what's that? That's 2 weeks ago, 3 weeks ago, I guess, in trading sessions. Yeah, about 3 weeks ago. There's price testing the underside of that support resistance zone, fail. Now we're back there again. Now other resistance overhead here, we've got the 50-day moving average, which is a significant support and resistance level. And of course, in this case, it's going to be a resistance level because, price is moving upwards towards that level. Let's just, I will start with a blank chart. I'm going to focus on gold in this session, unless somebody has a chart they'd like me to look at. I'm going to focus on gold. But let's continue with this chart since we're looking at it. Other indications, MACD. So as I spoke about yesterday, MACD is a good indicator, in my opinion. MACD is a good indicator of, well, several things. First one being, are we in bull mode or bear mode? And I put these labels on the chart yesterday. Let me do it again since we're talking about it. When both lines of the MACD indicator are above the center line, the 0 level of the MACD indicator, that's bull mode. And the expectation, and statistics bear this out, when both lines of the MACD indicator are above 0, that suggests that the primary trend is to the upside. When both lines are below the center of the MACD, as they are now, that suggests bear mode and that the primary trend is to the downside. Now, obviously, price trends reverse at some point, and typically they reverse at oversold and overbought points. And so this may be what we're seeing at this point, is a reversal from a oversold level. So this is bullish, that new MACD sell, or excuse me, MACD buy signal, where we've got the indicator line crossing the moving average. This crossover is a buy signal in MACD, which is bullish. Let's see, energy. Oh, let's continue since I'm babbling about MACD. MACD is not a bounded indicator. MACD can go to infinity and beyond, as Buzz Lightyear would say. But what quite often happens, based on my experience doing technical analysis, is that MACD reaches a certain level of being overbought or oversold, and then reverses. And so we can see a couple of examples of that here. So if this is the overbought level in MACD for this particular vehicle, silver, in the daily time frame, if that's our indication of being overbought from MACD, well, and let's look at price while we have this conversation. Here we are again, almost back up to that overbought level. Well, look at that. Price peaks and then heads lower. Similar, we reach the overbought level in MACD, price peaks and heads lower. Overbought, peak, heads lower. And so in the recent action, what we can see is that price actually pushed up to that level and through that level. And so that's an indication. It's an indication of a couple of things. The first one being that quite possibly the behavior in this vehicle has changed. It's doing something different. It reached this level of being overbought, but continued higher. There was enough energy to push price and momentum. In this case, obviously, MACD, we're talking about momentum, pushed up above that level. So number one, that's a heads up, hey, but behavior may be changing here. So, and then on the other side, let me duplicate this line. Now let me just I'll draw a new one. Same conversation on the oversold level, which of course is where we're at right now. And so if we start back here, and again, that's 2020, 4 years ago. So if we identify or guess, start with an assumption. I think that sounds better than guess. If we start with the assumption that this level in the MACD indicator is our oversold level and go forward, well, oops, let's scooch the chart up there. So here we are again, we reach that oversold level and price bounces. Oversold, price bounces. Oversold, price bounces. Somewhat oversold, price bounces. And so again, here we are again down at this extreme oversold level, and we're getting a bounce. And so I find MACD to be a very useful indicator. I don't use it. A lot of people, they talk about MACD buy and sell signals and base trading strategies on that buy sell signal. In my opinion, that's not a good strategy. And if you ever do back testing on strategies, you'll see what I'm referring to. There are lots of times when you get a MACD crossover buy sell signal that fails, and so be careful with MACD buy and sell signals. If you are going to use them, give them more credence in your strategy when they occur at oversold conditions, as we're seeing here, or at overbought conditions, as we had two examples of price being overbought. We can see what happened. There's price very, very, very overbought, fall off, overbought, fall off. So anyway, a lot of words, describing the current action in MACD. Very oversold level. MACD crossover gives us a buy signal from MACD. Energy, I talk a lot about energy because I believe it is important to understand whether a vehicle, and it doesn't matter what vehicle we're talking about. Let's see. So we want to know, is there any energy in this vehicle currently? Is there energy to take it higher? Is there energy to take it lower? And of course, if you're a precious metals bull like me, you want to see energy taking price higher. And so the stochastics indicator is what I use as my primary measurement of energy. I have other indicators that we'll talk about as we get to them. But just at a quick glance, when I'm looking at a financial chart, stochastics let me know very quickly, is there energy? Is there not energy? Obviously, energy is rising rapidly and headed up towards the peak of this indicator. And stochastics is a bounded indicator. It goes from 0 to 100. So anyway, very elevated energy in silver, which tells me that if silver wants to head higher, it has energy to do so, albeit we have to keep in mind that silver's got some significant overhead resistance to work through. This support resistance zone, and then the 50-day moving average overhead as well. RSI, lots of people use RSI. I look at it from time to time. Typically, the only time I look at RSI is when I see some other analyst referring to it. Not an indicator that I use a lot. Certainly, I don't keep it on my charts for my own work. And typically don't share it in videos. It just happened to be turned on in this chart. So anything else? We've looked at silver enough. Let's see what gold's doing. We're getting some nice action in gold. Started yesterday with this green. That's a doji candlestick. It's pretty thick body for a doji, but notice that we've got about equal length wicks, both on the top and bottom of that candle. Found support on the 20-day moving average, and then also found support at the top of this support resistance zone. So, 2 levels of support, 20-day moving average, top of this zone, bounced from that level yesterday, and now we're getting a continuation of that move higher. And not only a continuation of that move, but a move that is strong enough to push up through this support. Well, it's not a support zone yet because we haven't tested it as support. Currently, it's just a resistance zone based on, based on these 2 pokey bars that tested it as resistance. You could talk about that being a double top, or even a triple top when we got over to this point. That was last week, or actually earlier in the week action. But as we can see today, that's not a top, or it doesn't appear to be a top, because now price is pushing decisively above that level. So the next thing that catches my eye in this chart is that price is very overbought based on the moving averages. So look at the distance between the 50-day moving average, the red line, and the 200-day moving average. That's a big gap. That's a lot of air separating the 50 and the 200. So based strictly on the moving averages, gold is very overbought. Now, it's been working on working off, working on, working off. It's been gold has been basically chopping sideways, digesting this big move. I mean, let's back up a little bit here and talk about what gold has done in the last that's February. So between February and April, February, March, April, 3 months. 3 months, gold threw $400 onto its price. $400. That's a big move in gold. And so big price movement. We can see down here on MACD, price became very overbought, extremely overbought based on MACD. I mean, we can see I'm going back in time where there is where that level of overboughtness in MACD occurred before. It was peak back in 2020. And so here we are 4 years later, and we've reached that back in April. We reached that level of overboughtness again. And so not surprising that gold ran out of energy and reversed at that point. But, and this is the point that I'm making here, it's been chopping sideways as it worked off that level of being overbought. So, and reached down all the way to the little bit below the zero line, the center of the MACD indicator. But anyway, gold worked off its overbought condition over this period of time as it chopped sideways, and now appears to be making its next move. Would not surprise me in the least to see another $400 added onto the price of gold fairly quickly, to tell you the truth, albeit, oh, and I want to add, I'm going to add this to my checklist. Be aware of your biases. Pay attention to what your biases are. I'm a gold bull. I'm a silver. Well, I'm more of a silver bull than a gold bull, but I always remind myself that I have a strong bias towards gold moving to the upside. And so I always want to temper that. Be aware of your biases is my suggestion there. When we see a vehicle become overbought, and of course, the same principle applies to being oversold. Just that it'd be happening. We'd have a bunch of red bars instead of a bunch of green bars. Two things can happen. We can get a price correction. So, price peaks and then it pulls back. I mean, that would have been pretty steep. But it would not have been surprising to see, okay, price got way too overbought. We got a correction. And there's the key. If we had seen this kind of price action, I would describe that as a correction. That's not what we got. What we got was a sideways chop. This sideways chop is an indication of energy, and I want to add that, chop and energy, that's relevant. So two ways for a vehicle to correct or work off the state of being overbought. We can get a correction, we can get a sideways chop. When the energy in a vehicle is high, we get the sideways chop instead of the correction. And so that's one of the things we can see right off the bat in gold, is that gold is strong. Gold is doing fine. If you're concerned about gold, you don't need to be, in my opinion. Gold is doing just fine. It added $400 to its price, and now it's just chopping, working off that overboughtness. More of the same. So, price action elevated a little bit, pushed up above that resistance zone, but more sideways chopping, because again, $400 in 3 months is a big move in gold. So still overbought, and worked off, continued this sideways chop. But now, back to current action, it appears that gold is ready to make its next move. Will we ever see $200 gold or $2,000 gold again? I don't know, Yogi. If we do, well, I won't be buying gold. I'll be buying silver. But if we ever see $2,000 gold again, that might be. I'm not suggesting that it will be. It might be a backup truck opportunity. Or it might it might be that all the financial markets have crashed and took gold along with it. But we don't want to go there. So let's see. Let me get these lines out of here. They're minor support and resistance levels. We can talk about major support and resistance, minor support and resistance. I would say that is a minor support and resistance level. There it is: resistance, support. Actually, the 50-day moving average caught price there, support just below it. But so anyway, a minor support level there, and then a minor resistance level at here, this line based on that peak. But I'm just going to delete that line. It's a distraction. So, nice price action. What is that? 1.6%, $40. And so $40 in gold, that's a big move in one day. Which reminds me, forgive me, I'm making notes for things that I want to add to my checklist, which I'll be giving away for free. Impulsive price bars. The note that I just made was impulsive price bars. And so that's another measurement of energy. An impulsive price bar, here's several good examples. So an impulsive price bar is bigger than its neighbors. And so we can see, this big green bar is, at least equal or bigger than a lot of its neighbors. And then also another key for identifying an impulsive price bar. Let me, forgive me for pausing here for a moment, folks. I just want to verify that still live. I've got the indication that I am live, but as I said, this is only my second live session. So, yep, okay, we're all good. I'm still live. So impulsive price bars, one of the keys to an impulsive price bar is that price closes very near the high. If we're talking about a price bar going up, we want to see price close near the high of that bar. That's an impulsive indication. Not only did traders push price up, they were confident enough to remain long. They're remaining in the vehicle even at that elevated price level. They didn't take profits and go sit on the sidelines. They're staying in that vehicle. And so currently, I would describe that as an impulsive price bar pushing up through a resistance zone. Price is nearly at, and of course, today's trading session has not closed yet. And so I'm speaking that by the end of today's session, that may change, could change significantly. We never know. Notice that there is a tiny little wick at the very top of that bar. So the high was 2,500. Oh, that segues into another conversation. Interesting. So high was right at 2,500, and currently price is at 24.98. So, and really it's almost 24.99. So essentially still at 2,500. Since I just noticed that, let's spend a moment and talk about round numbers. Quite often we'll see, let me set this at 2,500. This is TradingView. It's the charting platform that I use for my videos. I prefer TradeStation. For my trading activities, I use TradeStation. But I like TradingView better. There's some vehicles in TradeStation where you don't get data without paying obscene amounts of money. Some of the Canadian stocks, the penny stocks under $1, TradeStation doesn't let you trade. You know, they say it's safety. They're trying to protect you, so they don't let you trade those some of the Canadian penny stocks. Round numbers. So round number in this case, 2,500. And so as I was saying, quite often price will reach a round number and then reverse or at least pause. And I would suggest that's exactly what we're seeing here. And the reason that round numbers are significant, it's human psychology. You know, you're sitting here as a trader and you're saying, yeah, okay, I'm long this vehicle. Where am I going to take profits or exit? You know, whether I'm taking partial profits or exiting the trade altogether, where am I going to do that? Well, if there's not an obvious resistance level, support level, you might choose a round number. And so, you know, there's probably some profit taking occurring at that level. And of course, you know, a $42, $42 gain on the day wouldn't be surprising to, well, two things. Wouldn't be surprising to see some traders taking profit on gold at this level. And then also headed into a weekend, there are organizations who would prefer that gold not look strong going into the weekend. But we'll see whether they're able to accomplish their objective. And again, this just Brian stating his opinion. Those forces are almost certainly right now selling gold futures contracts in an attempt to push price lower. They again, I'm speaking as if I know. I'm just guessing here. They'd like to see gold close. Pardon me, folks. They don't want to see gold close at 2,500, and so they're going to be selling gold futures in an attempt to drive gold lower. Let's see. Let's reset our chart. Oh, just nice action there. And take a look at some of the other indicators here. We spent a lot of time talking about MACD in silver. You know, let me get these lines are just distractions. So what I was looking for is where is the level of overboughtness again from a MACD perspective where price might reverse. And what I would suggest to you is that it's way the heck up here. Price has a long way to go before it becomes overbought on a MACD level, which of course that's bullish. That's bullish. Bullish action for MACD. A lot of room for MACD to move before it becomes overbought. And obviously in bull mode, as we were discussing earlier, both lines of the MACD indicator above the zero level. This is bull mode which suggests that the primary trend is to the upside. And of course, we just eyeball. Let me tell you, if you look at that chart and you see bearish action, you probably ought to stand on your head for most of the day, or at least when you're looking at financial charts. Just stand on your head, and then you'll see that that's bullish price action in gold. But forgive me, I'm being silly. Where's the top of that thing? Let me scooch it back down. Stochastics, again, my measurement of energy, my quick measure of energy, very elevated. So nearly at the top of its range. What's that? Yeah, essentially at 100. Again, bounded indicator goes from 0 to 100, and it's essentially at 100. So very elevated energy in gold. Just super duper super duper action, which kind of makes me wonder what's going on in the rest of the world. Let's take a quick, this is off on a tangent, forgive me. We'll take a quick glance what's going on in the equity markets. Now they're headed higher today as well, so it looks like everything back to the races in everything to the moon, Alice, to the moon. So, all right. Silver hadn't moved much, but just that I tell you folks, I'm enjoying looking at this chart of gold. That's just fine action. A big impulsive bar, elevated energy, pushing on 2,500, pushing up above this resistant zone. This is just fine action. We probably won't get to it in this session, but in the monthly time frame and in the quarter, well, heck, let's just go look at it. I haven't looked at this chart in a little bit. Let's, if I filter on gold and find, I think it's quarterly. Let's look at the quarterly chart. Is that it? Yeah, wahoo. So in the quarterly time frame, my current target in the quarterly time frame, 2,600 to 2,700, that's up at this level. This is a shift pitchfork, and we'll talk about forks in all of these live sessions. Pitchforks give us an easy target. If you're wondering, okay, what's the benefits of using Andrews pitchforks? Well, there's several. They define the price action, and very quickly let you know what the primary trend is. When you draw a valid Andrews pitchfork, you'll see the trend. I mean, clearly the primary trend here is to the upside, and that's exactly what the fork is showing us. Trend is to the upside. And second benefit, it gives us a price target. Because when you're working with Andrews pitchforks, anytime price moves through a median line, the next price target automatically becomes the next median line in the series. And so terminology, let me pull this line off the chart momentarily. So there's our basic shift pitchfork. We've got the center line, an upper median line, and a lower median line. And so when price pushed through the upper median line of this fork, the next target becomes, in Andrews pitchfork terminology, we refer to this line, where my cursor is, as the first median line extension. And so the target, as I was saying, automatically we know there's our next target, and that is 2,600 to 2,700. So, and all I've done to find that is, okay, price doesn't grow to the sky. Same thing about trees. Trees don't grow to the sky. They grow towards the sky, but they never reach the sky. Same thing with price charts. we're not going to get a single price bar, or it's very unlikely that we're going to get a single price bar that goes 2181 to 25. $400, a single price bar that would go $400. It could occur, but not likely. And so move forward a little bit in time, and then that's where the target is. And of course, in an uptrend, the target is continually rising. So the longer it takes price to reach that level, the higher the target is. And so that's why I'm giving a range here, 2,600 to 2,700 at that target. Let's see, I think I've got, this wasn't the chart that I was really looking for. I think maybe it's the half-yard bars. Let's look at that one. And that one is that. So this is in the monthly time frame. This is this pattern. This is a flag. Oh, and we haven't even talked. I'm adding to my notes again, folks. The checklist is growing. Patterns. This is a pennant flag pattern, if you will. Flags, pennants are continuation patterns, and so quite often what happens is we'll get the flagpole. We'll stick with the flag terminology. So here's our flagpole. Price does this big movement. We get the sideways chopping, and so I was just talking about the sideways chopping. That's the flag. That's the pennant right there. So flagpole, flag. What quite often happens from a flag pattern is that once price completes the flag, it goes and duplicates the flagpole. And so all I've done in this chart is I copy the flagpole, I duplicate it, and then I move it up to, in this case, I'm picking the bottom of the flag, which gives us a target up here at 2550. We could also talk about, we could put the bottom of our duplicated line at the top of the flag and talk about a target up at 2910 is what that target would be. I prefer to be conservative in my technical analysis, and so I choose the bottom of the flag because that's the most conservative thing to do. So anyway, 2550 in the monthly time frame as a price target. We're already at 2500, so that's not very exciting. We can see here that MACD is very near the overbought level from 2020, and then even back from 2012, which of course was the big peak, with big movement in the precious metals between 2002 and 2012, if you're unfamiliar with the precious metals. So again, MACD overbought based on MACD, very elevated energy in this time frame. Let's see what else we got. This is, we just talked about that one. Quarterly, we don't need to talk about that. That's what I was looking for. So this is in the half year time frame. So each one of these price bars represents 6 months. And in this time frame, what becomes obvious, if you looked at a bunch of charts, is this cup and handle pattern. And similar to what we're just talking about with the flag pattern, the way we find a target from a head and this isn't a head and shoulders, it's a cup and handle. The way we find the price target from cup and handle, we take the distance from the top of the cup to the bottom of the cup. We duplicate that line. Give me that copy. Oops, Control Z. we duplicate that line and we move it up above the top of the cup. And so that's what we've got here. This is the duplicated line, duplicate of this line, and it gives us our upside price target at 2,800. And so that's what I would suggest as our current target, folks, is that gold is headed towards 2,800. Well, there's a lot going on in the world right now. I almost certainly my expectations, and again, you know, I'm a precious metals bull from way back. Excuse me. So I expect to see that hit in 2024, unless the markets just fall apart, which is a possibility too. Quarterly time frame. What do we got? $173. So far in this quarter, where are we at? This is August, which is about to end, isn't it? So this price bar is about to end, $173. Big gain, big price movement in gold. All righty, let's, what do we want to do? We have 45 minutes. We've talked a lot about gold. We looked at silver. Let's spend a couple of minutes looking at the equity markets. This is S&P 500 in the daily time frame. And again, let's revisit biases. I have a bias against stocks. I shared this chart just the other day. Let me find it, because it is that it? That's not it. That's not the chart I was looking for. The chart I am looking for is the tech sector relative to the overall market, which is here. And so I shared this this chart this week, actually. This is looking at the strength of the tech sector relative to the broad market, the overall market. And I was pointing out the similarities between the popping of the dot-com bubble back in 1999, 2000, and the potential popping of the AI bubble here in 2024. And the point I'm making in this chart is, when I became an adult, I'll put it that way, with money. So not just an adult based on age, but an adult with money in his pocket to invest, start thinking about, okay, how am I going to save for retirement? Well, this is what's going on. Or yeah, at the time, this was what's going on. It's actually back here, you know. So I'm thinking about, okay, how am I going to invest my money? And I'm watching the dot-com bubble blowing up to the upside. And then I watched the dot-com bubble pop and do a pretty dramatic unwind, ugly action if you were in stocks, especially if you were in tech stocks when the dot-com bubble popped. But anyway, my point is, that was my influence. I mean, you know, when I started looking at financial markets, that's what I was looking at. It was the popping of the dot-com bubble. And so did a lot of research on stocks, the way that they are manipulated, the effect of inflation on stocks. Inflation affects everything, including the price of stocks. So, you know, you think your company is, you know, woo, my company's strong. Well, you know, maybe it is. Maybe it's just drifting higher with inflation. Another factor that pushes stocks to the upside is the fact that there's a whole bunch of money that moves into equities basically on autopilot. And it's all of the American workers with their 401k and IRAs, etc., they're doing monthly allocations into those vehicles, and then a whole bunch of that money goes into the equity markets. Last time I saw it, it was roughly $400 billion a year. So $400 billion a year, basically on autopilot, flowing into the stock markets. Well, obviously, that's going to bias the price of stocks to the upside, and stock buyback programs. Anyway, there's numerous methods for manipulating the stock markets. And that was a big part of my learning back here. And back to biases, that set up a very strong bias in me against stocks. So just sharing how I arrived at where I'm at today, that don't particularly like stocks. I think that highly manipulated, and in particular, when you want to talk about the Dow, there's only 30 stocks in the Dow. This is the easiest market to manipulate. I saw somebody had done a study, it's been years ago, probably 10 years ago, of how much money does it take to influence the Dow on a daily basis. And they were focused on basically using futures on the SPX. How do you push the market around with futures? And it didn't take that much money. $12 million is the number that is coming to mind. But again, this is something I read 10 years ago. And so if we were talking about the Dow, you go in and you buy futures on the 30 stocks that make up this index, and big surprise, the Dow index moves higher. So anyway, weighted indexes are interesting. Another game that's played with the indexes is we flip and flop stocks in and out of the index. And so if I'll just pick one. So Eli Lilly. If Eli Lilly starts to go to the moon, Alice, the people that manage the Dow Jones index might say, well, let's get rid of this doggy stock and replace it with Eli Lilly, because Eli Lilly is obviously headed to the moon. And so that's another way of, is that intentional manipulation? Yeah, we could have that conversation. We could also just describe it as managing the index with a bullish bias, that basically they're managing the Dow index with their own bias to keep the index moving higher. But one of the ways they do that is by picking and choosing the stocks that make up the index, and they'll dump stocks. If the tech sector tanks, the stocks in the Dow index currently from the tech sector, and that's a big big weighting in the Dow, those stocks will all go away. If they all go in the tanker, they won't be part of the Dow anymore, because the people that manage the Dow want it to go up. So anyway, enough of me babbling about the manipulation of stocks. That comment is about this action to the downside. So what I see here, let me get that out of the way. As I spoke in yesterday's live session, we are still here in the Dow in the daily time frame. This is still a technical downtrend. We got a high, we got a low, we got a lower high, we got a lower low, and so far, this is a lower high, lower than the previous high. And so, my bias, my expectation is that whether it occurs here today or a little bit higher, equity markets are going to run out of energy and roll back over. My expectation is they will head back down to the 200-day moving average, both the Dow and the SPX. Similar conversation. Let's get that out of the way. Let's zoom in on this action. for this conversation. What I want to focus on here is that right there. So another support resistance zone, based on, let me draw it, I'll pull it back to there, you know, basically like that. And as I was saying earlier, what I've done is I've picked the top of that pokey bar and the top of that bar's body as the top and bottom of my resistance zone in this case. And what I see is that price is pushing up into that resistance zone. That's all it's done so far, is pushed up into that zone. And when we're talking about technical downtrend, well, now that conversation becomes more questionable, because this isn't a lower high. I mean, actually, it is slightly. Let's see, that high, 55.61, and that was, wait a minute. Oh, there we go. 55.66. So this bar, 55.66, the high here was 55.61. So technically, this is still a lower low. Doesn't really look that way visually, but from a technical downtrend perspective, if the Dow doesn't push higher, this is still a lower low. We'll see. Let me reset this chart. One of my what I'm really paying attention to in the current equity action is volume. We got a little bit of a uptick in volume during yesterday's session, which is positive. You know, obviously the markets are still open currently, so we don't know what volume is going to look like for today. But overall, the trend in volume is still down. Volume, you know, this was the decline, whether you want to talk, you know, was it the AI bubble popping, the yen carry trade unwinding, who knows, whatever. Volume reached a peak at this low and then took off to the races to the upside. If equities were actually bullish, if this was a bull move, what we would want to see as confirmation of that move is rising volume. But that's not what we're getting, folks. Volume is falling off. Mom and pop investors are not participating in this rally for whatever reason. So that's MACD. Let's see, MACD. MACD reached this very oversold level. Not surprising, big downward movement. Now we're getting a bounce, and you know, again, a bounce. That's the appropriate term for a counter trend rally. It's basically, it's just working off becoming this oversold. It's the opposite conversation from what we had in gold. That in gold, price became extremely overbought, chopped sideways to work off that overboughtness. Here, the equities reached an extreme oversold level and are bouncing from that oversold. So equities, instead of chopping sideways, they're quickly moving to the upside and resolving that oversold condition. Energy is elevated. Let's see here. We got to let's see. Does anybody, if you've got a chart you'd like to have me look at, throw it into the comments. I assume that I can see the comments somewhere. Not positive that I can see the comments, but should be able to. Anyway, if you've got something you'd like me to look at, just let me know. Shoot me an email and I'll look at it in the next section, the next live session. which probably won't do this weekend. I maybe Sunday afternoon, Sunday evening. I might do a live session Sunday afternoon, Sunday evening as people are preparing for their market activities Monday morning. So watch for the next live session. And again, if you've got a chart that you'd like me to look at in the next session, just let me know. I'd be more than happy to look at any chart you want me to look at. Doesn't matter. Even crypto. How's that for magnanimous? Look at crypto charts if you want me to. We didn't look at the NASDAQ. Let's see what's going on in the tech stocks. The NASDAQ in the daily time frame, essentially identical to what we just looked at in SPX. We've got price pushing up into this resistance zone. I think, let's see what the high is here. That was 19,538, 19,561. So here in the NASDAQ, we no longer have a technical downtrend because this high is higher than the previous high by a scotch. Now you get into discussions of is that really enough? Did we negate the downtrend, the technical downtrend with that? We popped up 30 points over the previous high. Does that negate the downtrend? We'll see. Notice that price is dealing both with the resistance at the 50-day moving average and resistance in this resistance zone. So a lot of overhead resistance. MACD in bear mode. Well, let's see, where is the, yeah, MACD in bear mode. Got a buy signal back. I think that was Tuesday. We got a buy signal. Energy very elevated. Gappy action. And this, in other conditions, in other circumstances, I might talk about these gaps as being bullish. Gaps are always an indication of elevated energy. But when I look at the overall picture, all of this gappy action just makes me think volatility. The volatility and danger. If you're familiar with Lost in Space, that old TV show, and you remember the robot, he'd wave his arms around, danger, Will Robinson, danger, Will Robinson. And so anyway, that's what I'd be doing if I was that robot. Danger, Will Robinson. All this gappy action, again, acknowledging my bias against stocks, makes me leery of what's currently happening in the equity markets. That's a lot of gappy. That's a lot of gappy behavior. I think I'm going to wrap up here, folks. We've been at it for just over an hour. Again, watch for the next session. I'll have it on the channel, perhaps Sunday afternoon, Sunday evening, certainly on Monday, I'll do another session. And again, email me, stick it in the comment section. That might be a good idea. Put it in the comment section of this video, chart you'd like me to look at in the next session. And I'm gonna add to my checklist. Oh, and we didn't even look at that. Turned out didn't use it during this session. So this is my checklist, if you will, that I'm putting together. I'm going to add the items that I made notes of during this session. I'll publish this on my website and put a link to the download in a pinned comment on this video. Let me stop sharing. You see, there's my mess in the background. And I will talk to you soon, folks. Let's see, stream, end.